Okay, so when you hear biotech or maybe pharmaceuticals, what comes to mind? Often it's complex science, maybe lab coats, possibly some, legal drama.
Yeah, it doesn't usually scream excitement, does it? It's often seen as maybe a bit predictable or even kind of slow-moving, perhaps.
Right. But what if I told you there's a company in this very sector that's been sort of quietly combining really high growth, massive dividends, and this incredible resilience?
Okay, now you've got my attention.
We're doing a deep dive today into AbbVie. That's NYSE, ticker ABBV. Now, for a lot of people, AbbVie was basically synonymous with one thing, Humira.
The blockbuster drug, yeah.
Huge, huge. And maybe you heard talk about its potential decline after the patent expired. That was the big story for a while.
Mm-hmm. The dreaded patent cliff.
Exactly. But the sources we've dug into, well, they paint a really different picture, a much more compelling one, actually.
Right. So our mission today really is to unpack all that. We want to explore the evidence that suggests AbbVie isn't, just surviving life after Humira, but it's actually thriving.
Thriving, yeah.
And we'll dig into why it might be a really smart long-term investment. We'll look at the strengths, but also tackle the counter-arguments head-on.
Give you that well-rounded view.
Exactly. So you walk away really understanding the nuances.
Okay. The main article we're looking at makes a bold claim.
Yeah.
Buying AbbVie now could be one of the smartest long-term moves you could make. So, let's get into it.
Let's do it.
So let's start right there with Humira. It was called the Michael Jordan of drugs for a reason, right?
Absolutely. Peak sales over $20 billion a year. I mean, just staggering numbers for one product.
Unbelievable.
Yeah.
But that patent cliff wasn't just talk. It was a very real thing.
Yeah.
U.S. exclusivity ended in 2023, and yeah, sales took a hit. You saw that drop.
You did. And that was the moment of truth, really. But AbbVie, well, they played some serious chess here. This wasn't panic mode. It was strategic. They'd been preparing.
How so? What was the move?
They had the replacements lined up and ready to go, Skyrizi and Rinvoq. And these weren't just stopgaps. They were designed to be the new leaders in immunology.
Okay, and are they delivering? What are the numbers like?
Oh, they're delivering. Big time. Just look at Q1 2025. Skyrizi brought in over $3.4 billion. That's up 71% year over year.
71%. Wow.
Yeah. And Rinvoq, $1.72 billion in the same quarter, up 57%. These are explosive growth numbers.
So this isn't just plugging a hole left by Humira.
Not at all. This is an upgrade. Management's actually projecting that these two drugs together will pull in over $31 billion by 2027. That's more than Humira ever did at its peak.
So they're aiming to actually surpass the Michael Jordan era.
That's the plan. It's a strategic evolution, not just damage control.
And it's worth noting, these aren't niche drugs, are they? They treat a really wide range of conditions.
Exactly. Psoriasis, Crohn's disease, ulcerative colitis, rheumatoid arthritis, atopic dermatitis, ankle-losing spondylitis. The list goes on.
It's like using that sports analogy again.
Yeah.
Replacing MJ with, I don't know, LeBron and Giannis in their prime covering multiple bases.
That's a pretty good analogy, actually. So the key takeaway here is AbbVie faced this massive risk, the Humira patent cliff, and turned it into a genuine opportunity. They've built what many consider the most formidable immunology lineup in the whole sector now.
Okay, so they navigated the Humira transition incredibly well. Let's shift gears a bit, though. There's another side to AbbVie's strength, one that's maybe less flashy, but incredibly important for long-term investors.
Ah, you must be talking about the dividend.
Exactly. While, maybe some folks are chasing meme stocks or the next big tech thing, AbbVie has been quietly making its long-term investors pretty happy.
Very happy, I'd say. And consistently so. They've raised their dividend every single year since they spun off from Abbott Labs back in 2013.
Every year. How many is that now?
That's 11 consecutive years of dividend increases. That shows a real commitment.
Let's put some numbers on that. What does it actually mean for an investor?
Well, right now, the stock yields around 3.4%. The quarterly payout is $1.64 per share.
Okay, so let's make that real. If you held, say, 1,000 shares.
You'd be looking at $6,560 a year in passive income, just flowing into your account.
$6,500 a year.
Yeah.
And that's potentially tax advantage too, right? If it's in an IRA or a Roth.
Exactly, which makes it even more attractive.
So what allows them to do this so consistently is the dividend safe?
That's the crucial question. And the answer lies in their financial strength. They have a really conservative payout ratio, usually under 60%.
Meaning they keep a good chunk of earnings to reinvest.
Precisely. They're not stretching to pay the dividend. And it's backed by incredibly strong free cash flow, Pharma companies often generate a lot of cash, and AbbVie is among the best.
Okay.
So it's not just, acting like a bond. This is a dividend growth machine with potential upside from the stock price itself.
And in times like these, with market uncertainty, inflation worries, having that reliable income stream, it's like portfolio armor, isn't it?
It really is. It provides defense, that cushion. But you also get the potential for capital appreciation. It's a powerful combination, armor and growth potential.
Okay, so strong immunology lineup, solid growing dividend, but you still hear the critics, right?
Yeah.
Especially after a big drug like Humira loses exclusivity. The argument often is, okay, what else have they got? Is the pipeline empty?
Yeah, that's a common bear argument. The pipeline is dry. But when you actually look into it, the source material tells a very different story.
What does it show?
Well, first, beyond Skyrizi and Rinvoq, their internal pipeline is actually pretty robust. They've got active late-stage trials going on in major areas like oncology, neuroscience, even eye care.
Targeting big markets.
Huge unmet needs. Things like Alzheimer's, Parkinson's, schizophrenia, treatment-resistant depression. These are massive potential markets if those trials succeed.
And it's not just what they're cooking up in their own labs, is it? They've been pretty active with acquisitions, too.
Very strategic on the M&A front. The big one, of course, was Allergan back in 2020.
Right, that brought in Botox.
Exactly. Botox and the whole aesthetics business. That created this non-cyclical cash-generating machine that really helps buffer against future patent risks elsewhere in the portfolio.
Okay, that makes sense. Any other notable deals?
Yeah, more recently in 2024, they snapped up Immunogen. That gave them Elahere.
What's Elahere?
It's a really promising antibody-drug conjugate, or ADC. It's a type of targeted therapy showing great results in ovarian cancer, a potential breakthrough.
And they did another deal in neuroscience too, right?
Correct. Cerevel Therapeutics, also in 2024. That really beefed up their neuroscience pipeline with promising candidates for schizophrenia and Parkinson's, so they're buying innovation too.
It seems like they're building strength across several different areas.
That's the strategy. They're not just relying on internal R&D, they're also partnering smartly. They've got deals with companies like Neomorph and protein degradation.
Which is a really cutting-edge area.
Absolutely. And Nimbus for inflammation, ADARCs for RNA-targeted therapies. It shows they're exploring multiple avenues for innovation.
So pulling it all together, what's the picture that emerges?
You see AbbVie building real dominance, or aiming for it, in 4 key areas: immunology, oncology, neuroscience, and aesthetics. It's a much more diversified company now.
Right.
And crucially, they generate billions in cash flow. That gives them the firepower to keep funding R&D and make these kinds of strategic deals. So the bottom line is this is absolutely not a one-drug company anymore. It's become a fully integrated growth platform across several huge therapeutic areas.
Let's talk about resilience then, because the market feels, well, kind of weird right now, doesn't it? Election cycles, inflation popping up, worries about AI bubbles. Feels like things could get choppy.
Yeah, weird is a good word for it. There's definitely a lot of uncertainty floating around.
So how does a company like AbbVie fit into that picture? How does it hold up in, a world of chaos?
Well, that's actually one of its key strengths, according to the sources. Healthcare, and biopharma especially, tends to be quite defensive.
Meaning it holds up better when the economy or market gets shaky.
Exactly. Think about it. People don't suddenly stop taking their arthritis meds if there's a recession. Dermatologists aren't going to stop using Botox just because interest rates moved. Demand for essential treatments is pretty inelastic.
Okay.
So that makes AbbVie fundamentally one of the more defensive stocks you can find in the S&P 500. It's less tied to economic cycles than, say, a consumer discretionary company.
Is there data to back that up? How are they performing?
Yeah, the recent numbers are strong. Q1 2025 earnings, they beat estimates. Revenue was up 8%. And they actually raised their full-year earnings per share guidance to $12 to 29 cents. That signals confidence.
What about external risks, like trade wars or tariffs?
Relatively low exposure there. Their manufacturing is largely based in the U.S., which insulates them somewhat compared to companies with more global supply chains.
And legal battles, that's always a risk in pharma.
It is, but they seem to be managing it. Just last July, an AbbVie subsidiary won a $56 million verdict against a competitor who was infringing on Botox patents. So they're actively defending their intellectual property.
Okay, strong performance, defensive qualities. What about the price? Is it expensive?
Actually, no. That's another part of the value argument. It trades at a forward price-to-earnings ratio of around 14.
14 times future earnings. How does that compare?
That's cheaper than the overall market, which is often closer to 20 or more, and it's also pretty competitive, even cheap compared to many of its pharma peers. So you're getting that growth and resilience at a reasonable valuation.
So the argument is, if the market drops, AbbVie might hold up better. And if the market rallies, it still has the growth to participate.
That's the essence of it. It offers this kind of balance.
Yeah.
In a pullback, you want to own it for defense. In a rally, the growth engines like Skyrizi, Rinvoq, and Botox ensure you're not left behind. It's almost like a financial cheat code in some ways.
Okay, but we promised to tackle the counter-arguments. Let's hit them directly. What of the fact that Humira is declining? Isn't that still a drag?
It's a valid point. Humira is declining. But the argument is, first, everyone knows this. It's fully baked into the stock price already. The market isn't surprised. And second, as we discussed, Skyrizi and Rinvoq are growing faster than Humira is falling. The net effect is positive growth in immunology overall. The transition is working.
All right, next concern. The debt. That Allergan deal was huge. They must have taken on a mountain of debt, right?
They absolutely did. It was a significant debt load, no denying that. But AbbVie has been very disciplined about paying it down. They've repaid billions since the deal closed.
So the balance sheet is improving?
Steadily, yes. Their debt-to-EBITDA ratio, which measures leverage, is coming down nicely. And importantly, they maintain a solid investment-grade credit rating. Lenders still see them as very creditworthy.
Okay. Final big concern. Regulatory risk, especially with potential changes in administration or healthcare policy. Isn't that a huge cloud over the whole sector?
It absolutely is a risk for the entire industry. Policy changes, pricing pressures, these are ongoing concerns. But AbbVie is arguably better positioned than some to handle it.
Why is that?
Diversification helps. They aren't reliant on just one or two drugs anymore. Their strong cash flow gives them flexibility. And frankly, like all major pharma companies, they have significant lobbying power to navigate the political landscape in Washington.
So no stock is perfect, obviously.
Yeah, never. There are always risks.
But the overall picture for AbbVie seems to be one of balanced risk and reward.
That's a fair assessment, yeah. The potential rewards seem well supported, and the risks appear manageable and, in many cases, already understood by the market.
Okay, let's talk about something maybe less tangible, something the financial models don't always capture perfectly. Let's call it the X factor.
Ah, the macro picture, the unstoppable forces.
Exactly. What's the big one here?
Demographics? Pure and simple. The aging population. It's a massive tailwind.
Explain that. How does it directly impact AbbVie?
Well, think about it. By 2030, every single baby boomer will be 65 or older. That generation is huge. And as people age, what happens? There's naturally increased demand for treatments for conditions like arthritis, unfortunately higher rates of cancer diagnoses, more neurodegenerative diseases like Alzheimer's and Parkinson's.
Okay, all areas AbbVie is targeting.
Precisely. And it doesn't stop there. People are also living longer and want to maintain their appearance, so increased demand for aesthetics like Botox and fillers, too.
So you look at AbbVie's portfolio, rheumatoid arthritis. They've got Skyrizi and Rinvoq. Alzheimer's and Parkinson's, that's the cerebral pipeline focus. Cancer, immunogens, ADCs, and their internal oncology work. Wrinkles, Botox, and Juvederm. It seems like a perfect alignment.
It really does. They're positioned almost perfectly to meet the rising healthcare needs of an aging global population. It's hard to overstate how powerful this demographic tailwind is.
So the argument is, as long as people keep getting older and keep caring about how they look and feel.
AbbVie has a built-in growing customer base. It's one of the most reliable long-term trends in investing, and AbbVie is strapped in for the ride, you could say.
All right, let's wrap this up with a quick recap, sort of a checklist based on our discussion. Immunity to the Humira fallout with new superstar drugs.
Check. Skyrizi and Rinvoq are firing on all cylinders.
High, growing dividend income providing stability and compounding.
Double check. 11 years of raises and counting, backed by strong cash flow.
A deep pipeline and smart acquisitions driving future growth across multiple areas.
Check again. Immunology, oncology, neuroscience, aesthetics. They're covering the bases.
And finally, a reasonable valuation, market resilience. Plus, those powerful demographic tailwinds.
Check, check, and check. It ticks a lot of boxes for a long-term investor.
So the overall message seems to be, in a market that can feel a bit frothy sometimes, with meme stocks and AI hype everywhere.
AbbVie offers a dose of, well, clarity. You don't need an advanced degree to grasp the investment thesis here. It's about strong execution, diversification, shareholder returns, and riding that demographic wave.
Yeah, it just requires maybe a longer-term view and an appreciation for getting paid dividends while you wait for that growth story to unfold.
Exactly. Patience and perspective.
So is it the flashiest stock you can own? Probably not. No.
Definitely not winning any hype awards.
But maybe it's the kind of company that just quietly compounds over time, potentially into, significant long-term wealth.
That's certainly the argument presented in the source material. Consistent performers often beat the sprinters in the long run.
Okay, so let's leave our listeners with something to think about.
How might understanding this interplay, the strong drug pipelines, the robust dividends, those inevitable demographic shifts, how might that reshape your own approach to long-term investing? And maybe what other seemingly unflashy industries out there might be quietly poised for similar compounding growth?